in Switzerland, all of the deals coming off of COMEX, none of that's reported. Why would they want to tell us? Why haven't we told, let the gold at Fort Knox be audited? And they will. You will see gold. We will wake up and we will see gold at levels the world cannot believe, just like the head of the central bank, Dutch central bank said, talks about the gold revaluation account. And you can't make it up. Everyone in all central bank gold is held in an account called gold revaluation account. And all they got to do is make gold, 10 grand, bang. They're horrible balance sheets because along with accumulating gold, they've all been accumulating debt.
In today's news recap, silver price climbs amid Fed rate cut, anticipation, and political uncertainty. Silver's market value experienced a notable rise amidst a buoyant trading environment and a strengthening U.S. dollar. This uptrend in silver reaching a daily high of 30.88 largely stems from the market's increasing belief that the Federal Reserve will reduce interest rates starting in September. This sentiment was reinforced by Fed Chair Jerome Powell's recent affirmations, which have sustained lower U.S. Treasury yields, heightening silver's appeal as it offers no interest yield, making it a more attractive option in a low-rate landscape. The unsuccessful attempt on Donald Trump's life has paradoxically bolstered his 2024 presidential campaign, igniting expectations of diminished regulatory constraints under his potential administration. This prospect has prompted investors to lean towards riskier assets, potentially dampening the momentum for traditionally safe assets like silver. Moreover, the U.S. dollar's rise, propelled by the anticipation of Trump's policies inflating government debt and spurring inflation, has generally restricted the gains in silver prices. Recent data highlighted a reduction in U.S. consumer prices last month, marking the first decline in over 4 years, with annual inflation cooling to 3% from 3.3% in May. Powell hinted that rate cuts could commence before inflation fully reverts to the 2% target, aiming to stimulate economic activity by lowering borrowing costs. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
And it goes along with what we see. You know, silver's being drained all over the place as well. On the first day of deliveries here for the July delivery, or the August delivery contract, almost 6 million ounces of silver were delivered to some company called PTG that no one knows who they are. And this goes along with the continued outflow out of COMEX, SLV, the ETFs, other ETFs, and Shanghai. The weekly report out of Shanghai Gold was released the other day and showed 215,355 kilograms of silver leaving the Shanghai Metal Exchange. That's 7.6 million ounces, or the weight of 60 adult African elephants. So when you see gold and silver being accumulated and then taken off the exchanges, that means delivered somewhere. It ain't coming back the way that it is. What more do people need to know? And I can keep saying all of this stuff, but some people get it. Some people are waiting for something. I'm not quite sure what to understand that when this changes, it'll be a violent change. It starts out the little by little by little, because that allows, these people, these countries, these banks, these sovereign wealth funds to reposition slowly without raising too much in the way of an alarm. As you can see, gold at all-time highs, and virtually no one is talking about it. But when it switches, when there's no bid to be found on the Western exchanges, bang. We saw that Adam Glapinski, who is one of the guys at the Bank of Poland who's said some very interesting things over the years about what gold represents, said that he's the Central Bank of Poland, and they've ranked second globally for all purchases last year. He said purchases will continue significantly, and we've seen Turkey buy 6 tons in May, India buy 4 tons, the Czech Republic 3 tons. Every one of them brought it home. And now you have we talk about the reclassification of gold from its current status as tier 1. And now there's a lot of talk about groups trying to even petition it to be a HQLA, or a high quality liquid asset, which would be just above the tier 1 status. It is exactly the same thing as cash. And they are petitioning right now it would be the BIS or the London Metals Exchange. But all I know is that there are articles floating around that gold is being elevated to the highest level and accumulated and repatriated. And that's what I talked about at the show. That's, I think, the most important clue as to where things are going right now.
In today's episode, Andy Schectman shares his insights regarding gold, silver, and the economy. Recently, there have been significant movements in the gold market, particularly on the Shanghai Gold Exchange. Zhongkai Futures has been making large gold deliveries, indicating that major players are strategically positioning themselves for economic changes. Despite a strong dollar and ETF outflows, gold prices are hitting record highs, suggesting underlying shifts in the global financial landscape. Silver also plays a crucial role in this scenario. Used extensively in industries such as technology and military, silver demand is on the rise even though current prices are low. The Silver Institute's supply figures reveal a substantial demand gap, hinting at a potential sharp increase in silver prices. This situation underscores the fragility of our economy, characterized by unsustainable debt levels, over $1 trillion added every 100 days, eroding trust in the financial system. Countries like China and Russia are amassing gold, signaling a shift away from reliance on the U.S. dollar. This transition necessitates preparation. Andy highlights the emerging economic framework will likely depend heavily on gold. Nations are discreetly bolstering their gold reserves in anticipation of these changes, which could lead to a significant revaluation of gold and silver. Considering precious metals not merely as commodities but as essential financial safeguards is advisable. In the face of global economic shifts, those holding tangible assets will be better positioned to navigate the changes. Make sure you hit the like button, smash the subscribe button, and turn on notifications so you do not miss out our recaps. Also, check our description for full credit details if you want to watch the whole interviews. Enjoy the episode.
Concentrated short position in any commodity ever traded on COMEX. I mean, what more do you need to know? They're stepping on it for a reason. And, I also then talked about what's going on with the military industrial complex and how silver is not listed in the supply demand fundamentals. And with the amount of warfare going on, this is why they're stepping on it. They need it for military applications. I talk about John Little from the Pickaxe, his article where in the subcommittee, the subcommittee banking and currency hearing in October of 1942, S.2768, where they say the present consumption of silver for war purposes is at the rate of about 100 million ounces a year and is growing rapidly. According to the War Production Board, it's only a matter of months before war demands will have increased sufficiently to require at least 200 million ounces of silver per year. That's October 1942. I mean, come on, man. Like, we're not using it right now for these super high-tech weapons? Well, geez, do you think there's any correlation why it's not listed in the supply-demand fundamentals or the supply-demand numbers, rather, from the Silver Institute? Even with their 250 million ounce shortfall, we're supposed to believe that photovoltaics is the largest demand for silver. The military has nothing to do with it. And it's just dumb. All of these things that they just think we're all so stupid. Why would 8 banks be holding the largest concentrated short position in any commodity ever traded in a tiny little market called silver at a period of time when sovereign nations are accumulating the crap out of it? It's as dumb as a mud wall. And they're doing it because they need it to build weapons. And that's what this all boils down to. The military industrial complex. They're a step or two ahead of our president in terms of who's making the decisions. And I don't know. I find it's just the whole thing starts to get aggravating because it's so clear to me. I wish I could convince more people of what silver really truly is. It's so clear to me, but yet price is everything. And that's all people care about. It's just price is everything. Look at the supply demand numbers from the Silver Institute. You see nary a word about military. Yet in 1942, we were on our way to 200 million ounces a year, and everything is a whole hell of a lot more high tech than it was back then. So, and then you look at the silver disappearing out of the Western vaults and all of these things coming together You look at all the things that we've talked about with gold, how important it is to understand that the Project Enbridge, which Saudi Arabia just became a full participant on, how dollars are not compatible, U.S. currency is not compatible on Enbridge. Enbridge will trade the unit currency, which will be 40% gold. I did an interview today with Vince Lancy, and he was saying the 60% currency portion of it, those countries have every reason in the world to back their currency by gold so that it comprises the majority of the currency units within the unit system. And remember, the white paper on the unit says the gold is held within the borders of the country that possess it. They don't have to send it to Beijing or Moscow. They hold their own gold. They have it independently audited. They create a unit token, which will be 40% gold, 60% Brics currencies. And he thinks those India and China and Russia will do all that they can to back their currencies with gold. And why do you think China's not telling us how much gold that they buy? Do you really think they've stopped buying? No, they haven't. There's massive deliveries happening right now off of COMEX. They're just not reporting it to the IMF. So all of the gold they produce, the 400 or 500 metric tons a year, all of the gold that they accumulate that's not 995 pure, all of the gold that their proxy banks on behalf of the PBOC deal with the refineries in South Africa and in Switzerland, all of the deals coming off of COMEX, none of that's reported. Why would they want to tell us? Why haven't we told, let the gold at Fort Knox be audited? And they will. You will see gold. We will wake up and we will see gold at levels the world cannot believe, just like the head of the central bank, Dutch central bank said, talks about the gold revaluation account. And you can't make it up. Everyone in all central bank gold is held in an account called gold revaluation account. And all they got to do is make gold 10 grand, bang. They're horrible balance sheets because along with accumulating gold, they've all been accumulating debt. And one last thing I want to say, and I know you got to go and I'm just ranting and sorry for anyone who asked questions. You know, the more I think about it, think of what we're doing. As China and Japan are selling bonds and Russia and Saudi, the UK is buying our bonds, right? The UK, the freaking UK who's broke. So the broke country is buying the debt of an even more broke country so that we have enough money just to pay the interest on the debt we already.
What do you think of Andy Schectman's take? Will the East versus West war end up in a massive gold and silver price squeeze? Will the dollar collapse in 2025 as the Brics nations take over? Share your honest opinion in the comments section down below. Send a super thanks if you find our recaps valuable, and make sure you see this video right here because it's a perfect fit for you. I see you on the other side.